So what's a blue chip stock, you ask? A blue chip stock comes from a big, well-known company that's financially strong and reputable. These companies have been around for years, earning steadily and often give out dividends. They're worth billions and usually lead or rank high in their sectors. They're often names you hear every day. Blue chip stocks are popular with investors for good reasons. Examples include IBM, Coca-Cola, Microsoft, American Express, McDonald's, and Boeing. You'll find blue chip stocks in major indexes like the Dow Jones, S&P 500, and the Nasdaq. How big a company must be to be a blue chip can vary. Often they're worth over $10 billion, but leading companies of any size can qualify. And now you might ask, are blue chip stocks safe? So blue chip stocks are considered safe because they've been stable for a long time. They've often weathered tough times and market changes. But remember, big companies like General Motors and Lehman Brothers have failed, especially during the crisis of 2008. So then, is investing in blue chips a good idea? Deciding if blue chip stocks are a good investment depends on what you need financially, your investment goals, how you handle risk, and your investing style. Still, blue chip stocks can be valuable in a portfolio. They balance growth and value, helping smooth out economic and market troubles. These companies are reliable, strong performers with solid basics. Their dividends are usually steady, and reinvesting these can really pay off over time due to compounding. Blue chips as part of a larger portfolio. Well, blue chip stocks are appropriate for use as core holdings within a larger portfolio. They generally shouldn't be the entire portfolio. A diversified portfolio usually contains some allocation to bonds and cash. Within a portfolio's allocation to stocks, an investor should consider owning mid-caps and small-caps as well. Younger investors can generally tolerate the risk that comes from having a greater percentage of their portfolios in stocks, including blue chips, while other investors may choose to focus on more capital preservation through the addition of investments in bonds and cash. And where does the term blue chip come from? The term blue chip comes from the world of poker, where chips used in gambling have different colors to represent different dollar amounts. A blue chip is typically one of the highest values of them all, surpassing the white chips and the red chip. And now you might wonder, how do I invest in blue chip stocks? An investor can buy blue chip stocks individually or buy mutual funds or ETFs and invest in them. In some cases, funds and ETFs will hold a variety of stocks and asset classes, and those include blue chip. In other cases, funds or ETFs might focus exclusively on blue chips, such as an ETF that tracks the Dow Jones Industrial Average, which comprises of 30 of the most largest blue chip stocks. Blue chip stocks are aptly named because they're issued by the best companies in an industry sector and usually have rock-solid financials. Typically, blue chips demonstrate a history of exceptional performance and attractive returns for generations of investors. This is why they can be an excellent addition to a portfolio depending on your investment goals and style. Yet, they're not immune to market downturns and economic upheaval. That's something that all investors considering blue chips should bear in mind. Hey, if you're looking to learn more about stocks and investing, I have this awesome playlist right here called All About Stocks. I'm CodeMonkey Mike, software guy who loves investing. Give me some love and subscribe to my channel if you're new here, or share some thoughts in the comments below. Take care, guys.